Hey guys, good afternoon. It's Vinod here from GrowWealth. Today is the Sunday, the 5th of March, 2023. Market has had a nice up move, reversal move on Thursday and Friday last week, and many of the major indices have recovered their 30-week moving average or found support at 50 EMA and significant support level, which bodes well for further move to come in the weeks to follow. So there is a bullish inclination, bullish sentiment coming into the market. Despite some of the inflation data, the price hasn't crashed. So there were all the reasons available out there in the world for the market prices to drop, and it hasn't. And that gives us an indication that the bullish sentiment is coming back. The risk on trade is coming back to the market, that the people are willing to invest at this price. Let's look at the stock charts and the indices, how they have done. And I'm going to use the Stan Weinstein's stage analysis method for the watchlist stock review today. Let's start with the SPY, that's the S&P 500 ETF. That's what's shown in the screen right now. The blue line here is the 30-week moving average. And as you can see, the price has climbed above the 30-week moving average back in August 2022, crashed again, and then reclaimed the 30-week moving average again later in the year around November time, when below that, and beginning of this year, 2023, it reclaimed the 30-week moving average, came and retested and found 30-week moving averages as support over the last couple of weeks. The last week, increased volume and bullish engulfing candle above the 30-week moving average where it acted as a support. That is a character change. My members have also heard from me in previous posts about how when this new low has been set in October, lower than the June low, there has been a positive divergence in the secondary indicators, which indicated that the market might have found at least an interim bottom, and that has proven to be the case right now. And we have a higher high and a higher low. So positive price action. Anything above 30-week moving average, we should start to look out for pattern to see if it is going into stage 2 uptrend. So we had a stage 4 downtrend when it broke below the 30-week moving average. It's been consolidating, forming the stage 1 base, and it seems that it's trying to get into stage 2 once this level breaks out. Let's look at how the other indices have been doing. So this is QQQ, NASDAQ ETF. Below column, on the row below the chart here, where there is green and red sections, that is the Mansfield relative strength indicator. So for NASDAQ, it hasn't gone back into the green territory yet. That shows it hasn't yet outperformed the S&P 500, but it is very close to doing so. Here again, it found support around the 30-week moving average after reclaiming it, retested, and found support there. Similar to S&P 500, the NASDAQ also has a bullish engulfing candle. This one is IWM, that is the Russell 2000 ETF. Again, it reclaimed 30-week moving average, failed a couple of times, whereas in January, it reclaimed and consolidating above the 30-week moving average. And as you can see, it is outperforming the S&P 500 as shown by the green section here. So the major indices are showing some bullish signs. Let's look at some of the stocks and how they are performing. There are lots of stocks that is setting up. Identify your trading strategy and stick to your trading strategy consistently, despite the short-term kind of volatility in the price actions. So today I'm going to show you how I'm analyzing these charts, these stocks that I have in the watch list based on the stage analysis as pioneered by Stan Weinstein. This stock is IBP. It tried to break out of 30-week moving average, broke down again, went into the stage 1 basing, and reclaimed the 30-week moving average here on higher volume. You could see high tall skyscraper volume coming in week after week over the last couple of months, and consistently since the beginning of this year, when it broke out of this section here, it's been doing very nicely and following the breakout. It's kind of having a follow-through action of bullish sentiment. So the early entry point would have been here, whereas there is also a resistant level right there where my cursor is. That was broken out of by the end of January, and it came and retested in February, and now it's nicely progressing further to the upside. So strong stage 2 progress shown in this chart. Next one is Duolingo. It's related to new IPO. As you can see, came to the market in July 2021. And soon after, along with the whole broad market, it collapsed. And it had gone through extended basing period for the last year and broke out of the 30-week moving average, came and retested and had a fantastic earnings last week. And you can see the highest volume it has traded all its lifetime since coming public. It's in the green territory according to the Mansfield relative strength, so performing better than the S&P 500. And it broke out of this horizontal orange line, which according to me is the breakout point, and it is now entering into stage 2 uptrend. IoT, it has just crossed out broken out of this horizontal line, huge volume, highest volume it has ever traded in the week, and it is also kind of breaking into the stage 2 uptrend, I would say. The early entry would have been here, right there, by end of January, where it broke out of this pivot point. So it's slightly bit extended compared to that, but there is this pivot point that is breaking out of. And you could also zoom out and see it is a double bottom setup that is breaking out of the neckline here. So that is also, this one is also showing a good bullish price action. The next one is Shift 4 payments. Strong volumes being accumulated. So big money is accumulating this stock when it crashed from 104 to as low as 29 actually. So extensive crash along with the market. When it is basing, institutions have started to accumulate, as shown by the strong blue buying candles on the screen. So it had a fantastic earnings and broke out again of this pivot point here. Right there is where the stage 2 has started, I would say, higher than previous week's volume and breaking out of this horizontal orange line. So stage 2 started there, in my view. It went up to this point, which is the previous resistance, pulled back slightly just before the earning, and earnings were fantastic, and it kind of reclaimed those price points and also traded at one of the highest volume in the recent history. So continuing the stage 2 uptrend really nicely. The green line is the all-time high price at 104. It certainly shows all the right signs and the momentum behind this that could easily take it to that level. MNDY, Monday.com. It's one of the growth stocks which got crashed during the 2021-2022's bear market cycle. And it's been going sideways for the last 6-7 months, setting up the stage 1 basing pattern. And it broke out here. And I believe it has just started the stage 2 uptrend 4 weeks ago and continuing the stage 2 uptrend. And you can, if based on the stage 2 uptrend, you could keep these moving average, 30-week moving average as the support level as defined by the Stan Weinstein. There are different setups, different stop loss category criteria for investors versus traders. So by defining what type of trader you are, you will have the right risk management strategy. The next one is GSL. Like most things that we've been seeing, it's been consolidating for the last 8 months. And now it had a high volume breakout to the upside, breaking out of this pivot point and filling this gap here as well. So nice follow through action. It's just entered this green zone, showing Mansfield relative strength. And let's look at the daily as well. So post earnings gap up and 3 days of high volume follow through shows that it's not just one day wonder. People are kind of buying this stock, and momentum is building behind this name, as evidenced by highest volume since August 2022. This one is ARHS. New IPO is giving us a cup shape price action, but there has been a good opportunity to enter here upon breakout out of the 30-week moving average and the resistance point here. It's also showing good relative strength, and ever since it broke out in November, it's kind of went all the way up to the all-time high price and consolidating there. It's a very healthy sign to see that it is not giving up its gains, and upon hitting the all-time high price, it's consolidating the huge run it has had from 4.2 to $15. So fantastic run. It's consolidating, digesting its gain, and if it kind of breaks out of the green line, that would be another strong bullish indication to get into this name. LW. So this is a great, I've made some pointers here, shows you how to trade successfully the Steinweinstein's method. So Lamb Weston. This had its resistance point here, broke out of the 30-week moving average, and when it broke out of this resistance point here in June, that is when I entered this trade, and that would have been a decent entry point using 30-week moving average as stop loss. And ever since, it hasn't revisited the 30-week moving average. It's nicely stair-stepping and gently kind of progressing its bullish price action. And the entry point at 71 has now, the price has gone up to $101 per stock. So nice bullish stage 2 uptrend. And this is one of the examples of how you could successfully manage your position using stage analysis. NRDS, relatively new IPO, forming the right side of the cup. Hopefully that it gives us another consolidation phase, a handle for entry point. Similar to ARHS, this is kind of showing strong price action, good volume accumulation on the right side here. Week after week after week, there's 8 weeks of continuous bullish price action. And ever since it's broke out of this kind of pivot point here, strong bullish follow through has been happening. And the recent earnings had propelled its momentum. Its green line is right here at $34, and it's showing all the indications that it could go and test that level in the next coming weeks and months. HIMS, H-I-M-S, HIMS and Healthcare. This is now in stage 2 after reclaiming the stage, the 30-week moving average and breaking out of this consolidation. You could see there's a mini handle and breakout here. That would have been a great entry point either here or there by the end of January. And ever since, it's been progressing well. This huge candle is the post-earnings trading. So a lot of buyers coming into this name as well. GNE, it had a nice consolidation breakout end of January again, followed through nicely in February, and the last couple of weeks it's digesting its earnings and gentle pullback to the previous consolidation level on low volume. So not much selling coming into this name. It's still in the green section, so still showing relative strength right at the pivot point where it broke out of. If this holds support and reclaims, resumes its uptrend, that'll be a strong indication to either add to the existing position or as a new position. ONON, O-N-O-N, relatively new IPO. Now above the 30-week moving average in the green zone of Mansfield relative strength, high volume clues coming in, so institutions are accumulating. If you look at the life cycle trader strategy, so this will be in a institutional due diligence phase. Once it break out of this level, it'll be more significant stage 2 breakout, but it's now giving a good early entry point. FSLR, First Solar, this is in the solar solar industry, and that is having a nice headwind, nice tailwinds since the policy has been favorable in the US. So ever since it broke out of the 30-week moving average, the huge 36% move in 1 week by July 2022, it hasn't looked back ever since. It just kept going, start stepping nicely, giving us higher highs and higher lows. And you can see at the bottom of the screen the huge volume accumulation that told us that the sentiment has changed compared to the left side of the screen. When it broke out at a huge volume in July, that is an indication that money is flowing through this name and a sign to get into this stock in your investment portfolio. BT, it is in stage 1 consolidation. It broke out of that here by end of January, but then that is immediately followed by selling and went below that kind of breakout point. It's still above the 30-week moving average. It's still in the green zone. I would like to see it reclaim this level at $43, $44 mark. And it's likely to do next week, looking at the volume clues as well. So this is the last 4 weeks of pullback. I believe it's just a gentle digestion of the big, huge move here of 23%. And it's nicely going to, I believe it has potential to kind of resume its uptrend. So if it does that, it is a good entry point to consider. AIT, you can see on the screen that it broke out of the 30-week moving average here after the COVID crash. And ever since, it has been gently kind of hugging the 30-week. So it would have closed the trade if you were tightly managing based on the Steinman-Stein's method. But then this is the stage 3 kind of consolidation distribution phase, and then resumed stage 2 again when it broke out to the high, breaking above the all-time high price, the green lines shown here. And institutions want more, and as you can see, high volume, buying volume coming in. The blue tall skyscrapers here shows there are strength in this name still, despite the move it has had so far. NVIDIA, big crash along with the growth stock name, resumed, recovered the, regained the 30-week moving average right there on high volume, and it's now continuing into the stage 2 uptrend ever since it broke out of the spirit point right there by the end of January. And as you can see, the volume clue has been there as well. Axon, it has closed at the all-time high price last week after the earnings. It is in the stage 2 uptrend since it broke out of this level from October onwards. It gave a consolidation and re-entry point again here for traders, but for institutionals, for investors, the best entry point would have been right there. But with the consolidation, it gives additional secondary entry points for us. And it's been a nice setup to consider. Huge volume as well coming in, showing that more upside is likely to come. So after the earnings gap up, it hasn't given back much. It's just consolidating above the green line, the previous all-time high price set many, many months ago. So that shows that there is no appetite to sell this stock, meaning the upside is the likely probability. MDB. So far we looked at the stock that are in stage 2 or at all-time high price. The next couple of stocks is the ones that I have in watchlist that I'm watching, that for it to consolidate in stage 1 and to break out into stage 2. MDB, MongoDB, high growth stock, quite volatile name, as you can see in the chart as well. So it broke down from about $570, $580 mark all the way down to $135. And now it's sitting at $220 mark. Is this a bear flag, or is this a part of the stage 1 consolidation? We'll have to see. But if you look at the volume clues, there are huge volume coming in. So people are accumulating the stock at lower prices. If you look at the daily, good volume clues you can see here as well. The price has just recovered the key moving averages in the shorter term and the 30-week moving average as well. Now you have to wait until this descending trend line breaks and for the relative strength to get into the green zone and the volume clues to follow through. for us to feel much more confident that it is getting into stage 2. So it's not clear stage 2 yet, but something to watch closely for the subsequent weeks to come. Zoom communication, Zoom video communication. So I'm using Zoom for this video recording. It's that stock, ZM. It has been in an extended downtrend below the stage, below the 30-week moving average in a stage 4 downtrend. So it's still in stage 4, but it is, unlike the previous price action, it's going sideways much more than the previous downtrend. So it seems like it is starting to set up in the stage 1 basis, stage 1 base. It's still not out of the woods yet until it recovers the 30-week moving average and breaks out into the green zone about this pivot point into the stage 2. It is in the penalty box still. So these are the high growth names to be in your watch list to see if it kind of gets into stage 2 uptrend. Hope it makes sense. There are numerous other stocks. There are various ways to analyze the stock market and individual stocks. But today I chose to show you the stage analysis method and the stocks in stage 2. Hope it made sense. And happy learning, successful investing. I see you in the next video. Bye-bye.